Good morning. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for June 25th, 2016. We have a market that is in sideways normal after the record breaking sell off on Friday. On an annual basis, with weekly RSI, we're in the middle of neutral at 51 out of 100. Oversold on a 10-day basis, looking at the 10-day NDX at 5 out of 100. Reviewing the market mosaic, we have price with respect to the 200 is now in sideways at 1.53% above. That's white sideways. Slope of the 50 is yellow neutral at a positive 0.05. ADX is non-trending at 16.1 with bears in charge. The risk index is the 30-period moving average of the VIX divided by the 10. The boundary between risk on and risk off is 1.0. The current reading's at 0.816, so we're deeply into risk off. We take that score and compare it to the last 5,000 trading days. Find the average and the standard deviation to compute the risk Z, which is at minus 2.21. That means it's 2.21 standard deviations worse than the long-term average. You can see here a 90-day histogram of that indicator. We've been toying around here in a small sideways channel and then broke down decisively here and are at minus 2.2. So this favors short-term trading, no long-term investing, opportunistic swings when the reward to risk is in your favor, but really the short-term trading is really to be emphasized right now, as we've been saying, since it went negative 10 days ago. See the blended monthly rebalancing portfolios. Next rebalancing is due on or about 1 July. The current leaders based on Friday's prices you see here for ETF 13, 22, and 32. In ETF 2, the theoretical model is at 20%. The model portfolio itself is at 100% exposed with stops in place. Quick look at the ETF rebalancing portfolios. Most are on a cash signal here. The defensive plays like treasuries, U.S. real estate, and then U.S. mid caps and small caps still doing well on a relative basis. In the ETF 32, basically the same thing. Brazil was a surprising number one position, only down 0.41 for the week. You can see the strength in gold, energy, and utilities, and treasuries. In the ETF Max, dominated by precious metals, gold, silver, real estate, energy, and Brazil. S&P 500, this lists the top 40 or so performers using the same blended monthly rebalancing lens. Big losses here in Southwestern Energy, and may be an opportunity for some value plays there. Also Freeport Moran in the commodity space. Newfield Exploration might be of interest here, plus 4% for the week. Newmont Mining. So there's a real divergence here, even in the large companies in the resources area, with Newmont Mining up 5, Range Resources down 4. So this has been a stock pickers market for sure. Looking at the market health check here, the vertical blue lines are 10, 20, and 30 days worth of look back. Horizontal red lines are support levels that have held. This last one held right at the previous belly of the dragon here at 203, 204, 203. So we're down 4% from the all-time high. So in shooting distance of the 200-day moving average, which has begun to improve here slightly, noticing. See the slope of the 30 period regression line has rolled over, although it's still above the dotted zero line. So you can see that the 30, even with this date in here, now that's not going to get better anytime soon as we start dropping off some of these older dates and start adding prices down in here. That's going to roll over here relatively quickly. The 10 period is basically flat. Jaws of PPO open to the downside. We're deeply oversold. So now the question is, does this 200 period hold? And that's the way I'm playing it. Realistically, you get 2 years of negotiations for the Brits to sort it out with the EU. Trade's got to continue. Just because they're going to be their own dog doesn't mean that the business has to change. And so buyers will buy, sellers will sell, but business is going to continue as usual. I think the hype is overblown. ETF 2 regional report. 8 of the 10 indexes are on cash. They're below their 4-month moving average. Only U.S. mids and smalls are above their 4-month average. Market conditions sideways normal. The S&P at 23 is still better than the globals at 18, so it's still the U.S. The Brexit vote will only emphasize that further. Inside the U.S., it's mid caps, then small, then large, followed by tech. 2 strongest sectors, small caps and mid caps. I should add Latin America in there. I missed that. And then the 2 weakest sectors, Europe and the Euro-Asia blend. Inside the sector spiders, utilities, energy, and basic materials. So the defensive plays. All of the other asset classes are kind of up right now with gold, silver, commodities looking good. Everything in the U.S. is below average. NASDAQ have been hit hard, especially. Only mid and small cap value above average. Latin America above average. Canada above average. When was the last time you saw the U.S. mostly below average and Latin America above average? So a real topsy-turvy relationship in one, which suggests maybe that the bottom in Brazil and Latin America really is in, that they've sold off what they can, and the bad news is priced in. Plus, they're not Europe. Everything Asia down except India and Philippines. China especially hard hit. Brazil very strong. So that continues to be a favored trading target. Everything Europe weak. ETF top 30 using the ETF 2 lens. Same as we saw in blended monthly. It's miners, precious metals, basic materials, gold, energy, and real estate REIT index. In the Dow 30, only Pfizer and AT&T at the top. Losing strength now in United Health and Chevron. Walmart has moved to the top of the stack. It was down here in the red a little over a month ago. Bottom feeders, Apple, Microsoft, American Express, Disney, Home Depot. Interesting. Some opportunities there. Verizon is on its way up here, white and yellow. ETF liquidity stats. Shifting to the daily, lots of channeling and overreactions to choose from. Plenty of 551 Ws and auto framers to select from. Note the strength in the bears here under ADX. Volatility spike is into the middle of normal now. Many to choose from in the auto framer and among the channeling and overreactions. The ETF 30, the same, very few dojis, lots of channelings as things find their bottoms. 24% one-day gain on the VIX, single largest day ever. I'm stalking XIV for volatility, inverse volatility being on sale. Europe especially hard hit at -11. Auto framers offering some reasonable targets in here. Here are the key price levels. And in the regression line fractal framework, in the top shelf in the green are those symbols, the most ATRs below their own RL270, which we take to be long-term fair value. So these are the deep value plays. Microsoft, Home Depot, McDonald's, Nike, and Coke. No squeezes, not surprising with that range. Yeah, that'll get your attention. Finding support down here at 203, we'll see. Next week should be very interesting. Short-term trading and the intraday owl pattern did very nicely for us on Friday. Started the day as volatility traders using the owl pattern. We have the large gap up, and this is, we're looking at VXX on 1 minute. Large gap up. The unambiguous move down. We have an RLCO outside the river, pattern condition 1 is the unambiguous move. Condition 2, RLCO outside the river. Condition 3, the RL10 crosses the dragon. Condition 4, the dragon is rolling up. Condition 5, the RL30 is rolling up. So we buy our entry here at the candle breakout, selling and cashing one here at the RLXD at 1550 for a little over an R. Next one we have is the Z3 pinch breakout at 1550 with a stop at 15 and a quarter at the Z2 line. You see we get in the money really quickly. Now you can start managing with the 90 or the dragon. At around 16 even, we get a second entry. This is a money management edition. You know, this is with their entry around 1560, 1620 on a relatively low risk. That's 2R in hand. You can move that stop up to the Z1 now. With two positions on and this RLXD, we take our usual exit here and start stalking the next leg. This is such an extraordinary day that we're only going to be looking at the long side on VXX until we look for an afternoon trade for the counter rally. So we get our exit here. Get our next pocket entry here with the pull back here to Z -2, and then the pocket starting again. Have our stop here at 30, 25 to 30 cents away underneath the swing low in the Z2 line. Quickly back into the money again. That's enough to get us out. So So again, we're just looking to take pieces when things are in our favor. So that's a move from 1630 to 1670 on a 20 cent. So that's 2R. And we're stalking the next re-entry. That's one we don't get because we've got a long side bias today. So this is an unambiguous move. You have an RLCO outside the river. RL10 has crossed the dragon. Now all we need to see is the dragon roll up and the 30 roll up. You can see the 30 starting to improve here. There's an entry. So 1640, we have our stop here at the Z2, so it's about a 20 cent execution stop. Now when we get this breakout here above that swing, you know, the hump in the dragon, so you can see that, we take this, lay that on here. So we've got to get our entry up here on 1685. Got two positions on, so we've got to raise our stop up in here to about 1675, get us close to being in the money. Now we're getting towards the last hour of the day. This would be a natural place to raise our stop even tighter. If you struck here, that wouldn't be out of the question, and boom, out. So now these are, in my view, all the leverage guys getting out. And now we're going to be stalking for the afternoon owl, which is going to be an ambiguous move up. You have the dragon rolling over. So let's do this in order. Unambiguous move up, RLCO outside the river, RL10 crosses the dragon, 30 rolling over, dragon rolling over. This is where we now pick up a short orientation here, and now the target is back towards the VWAP. Had that 2-bar shock right there. So we would look at getting, we would actually be taking this in XIV on the long side, and so we're going to get, we would get short VXX or essentially long XIV right about this location, and aiming back for a move back to the VWAP here. And we'll just see how that trade unfolds. First one is a scratch. Typically be getting short inside here on the RLXD. So that we got to either, depending on how you get your entry in here, you either get a fractional loss or a scratch. At this late in the session, we're not looking for any more to the upside. We get another short entry over in here. In this form of the dragon. And we get the return back to the VWAP in the last few moments of the session. We would cover So that's what the day and the afternoon looks like. Harvesting volatility. The owl is our friend. Performed very nicely on such a volatile day. So it's Ken from Tortoise Capital. Let's keep your risk measured and your powder dry. We'll be looking at intraday short-term moves like this in the week ahead, and then start picking up the longer-term view once markets settle down a little bit. So keep your risk measured and your powder dry.